Good morning, everybody. Hey, good morning, team. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Good morning, James, Tim, Kevin, Facebook user. One of you is most likely in one of our private Facebook groups. That's why it pops up like that. Hey, good morning to you guys. Good to see the early birds jumping on. I'll do the quick formalities, the quick intros while we're waiting for the live stream to warm up. Jason Witten's my name. Most of you know that, I'm sure. And if this is your first time dropping by and saying hello, or wandering by and finding us on the live stream in the world of YouTube, Facebook and other places, then welcome. Let us know where you are today. Kevin's all the way from Florida. Jeff, he gets about. G'day, Jeff. Good to see you, mate. Thanks for dropping by. But if you're new, let me know. Let us know. Let us know where you're coming in from to the live today. I've been hanging out doing these Wealth Coffee Chats with you guys as property investors. We've got some things in common. We like the idea of creating wealth, long-term sustainable wealth with our property portfolios. I've been doing that over 20 years. Hey, we've got someone in from Toowoomba. Fantastic. Up the hill from me. I'm here on the Gold Coast. Great little town, Toowoomba. Like I said before, I've been creating my personal wealth over the last 20 years. Made some good decisions, made some terrible decisions. Lost a bit of money, made a bit of money. I'm well ahead at this moment in time, which is nice. And been sharing the wisdom, the experience from the School of Hard Knocks with you guys, ladies and gents, girls and boys, to see if, you know, some of the lessons I've had. Chris and Kat, good morning to you. I have had along my way as a investor might be useful to you. So there you go. That's the intros done and dusted. Welcome to all of you this morning. This morning I thought I would talk about the three types of investors, or the three types of investment profiles or property or the types of profiles of people that I see using property as a wealth vehicle, Because I think sometimes what I notice, I don't know about you, but sometimes we get a little bit confused about the behavior of what a true investor is, and sometimes some other things get in the way. And I have seen over the years some challenges, and speaking from personal experience also, I'll tell you a little story in a minute about that becoming a problem. So let's just set the scene about the three profiles of people that might call themselves investors, might see this as property investing, but I don't see it as property investing at all. And I want to talk to you about this. One I see as property investing, the others I see as something else. So hopefully you're all ready. We're good to go. Let's talk about this. And let's talk about the three profiles of people I've seen in the world of real estate using it for wealth as we go along. An investor, I would call, let's talk about what I would call the most common profile. I would call an actual property investor. For me, a property investor has this one focus in mind. Yeah, good time Charlies, indeed. Yep, good time Charlies. We don't want to be one of them. We don't want to be in the market with good time Charlies, only here when it's all, you know, roses and champagne. And, you know, the first moment something goes astray, they're selling their properties and they're going, oh, property investing doesn't work. You know what doesn't work? Your attitude, your resilience, your understanding of what it actually makes or what it takes to make wealth in real estate. So as an investor, let's talk about the base definition, the base realities of an investor. An investor, a property investor, for someone who wants I don't really like the word passive, but a lot of people use it, a passive investment strategy and vehicle that is something they do, they purchase and keep properties for a long time. Let's talk about that. Investor, one thing, this should give it away, B and H. Tell me what that stands for. An investor who wants to create long-term, sustainable, absolutely awesome wealth. Tell me in the chat, what does B and H stand for? They and this property. They purchase it, and what do? Tell me in the chat what that is. Most of you guys will know this one for sure. Most of you listening in today would be this profile of investor. As we go, anyone got their quick typing thumbs out? Nothing passive. Yeah, that's exactly right, Luke. There's nothing passive about it. Tim is on it. They buy and they hold. What do we buy a property and do we buy a property for 2 years and go, oh, I think I bought a dud. I'm out. No, crikey. Good times. Talk about good times, Charlie's. This do not become part of the property investor ethos if you're not in this for a minimum of 15 years. Now, some of you might already be underway. You might have a few properties under your belt. You've got 5 or 10 years left in your event horizon for investing. It's 15 to 20 years. 10 to 15 could be a bit of a rush. However, if you start with significant resources, lots of finance and lots of deposits, maybe you could squeeze it up a little, but your portfolio needs time to mature. 15 to 20 years. How much? Let's say we're talking about, as a property investor, 5 to 7 investment properties. What sort of dollars do you need to get going? What sort of amount of, let's say, starting out, what sort of money do we need to get going to start our property investment portfolio? Really at the end of the day, 80 to 100K, okay? 80 to 100K will get you out of the gates. Now, it depends on where you are, what city, whatever it is. Yes, sometimes places are a bit more expensive than others, but 80 to 100K to get going. What's the risk? The risk is very low. To be honest, I would say the risk is almost nothing. The risk comes from you as the human. The property is very easy to manage or minimize risk. So as a buy and hold investor who wants to create wealth over 15 to 20 years, you can acquire 5 to 7 properties over that time quite easily, starting out with 80 to 100K, very low risk. Okay, perfect. And I love that. That is a very straightforward, achievable outcome for 99% of people that I spend time with and coach and help in the property investor game. All right. Now, not to be confused with these next 2 profiles, folks. Hey, good morning, James Connolly and James Murray. Good to see you, Margaret, as well. Luke. Hey, the next 2 profiles. Let's see what they are. Buy and it's not an and. I'm trying not to give it away. I'm trying to ask you, what do you think? What do you think it stands for? Buy and there's an and then there's an A. Buy. Morning, Alison. Good morning to you. All right. Buy it and what? I don't know. Anyway, it's a terrible way of asking. Property investors, or some buy and hold stocks. Yeah, and that's very similar to down here. Whoever said buy and hold stocks, for sure. No, that doesn't say buy and hold stocks, but that's there you go. So buy and hold, or buy and add value. I couldn't fit the V in there. So that anyway, that Hopefully that makes sense. They buy something and they try and add value. What are ways you can add value to real estate? Right? You buy something, you see some value to be added. Put that in the chat for me. The simplest one, you know, in there, this is an activity, and, you know, a simple one. Simple way, you can renovate. What other ways can you add value to real estate? You buy it to add value, to create some, yep, absolutely. You can add a granny flat. You can subdivide. You can strata title. Back in the old days, back in my day, I used to do a lot of strata titling. I used to buy a duplex or a triplex or a 4-pack that was all on one title. I'd chop them up, I'd renovate them, and sometimes I'd sell them, sometimes I'd keep them. Okay, so you can add value and you can turn them into a hold. Okay, you can keep it or you can sell it. Okay, active, and this is you can furnish. You can make them a bit more active. Furnish, yep, Airbnb. Now this is a bit more active. I would call this investor here an investor developer. If you're spending more than $30,000 on doing something in here, this is where I say to my clients who I coach, this becomes very active. You have to project manage. You have multiple people coming at you for different things. The plumber, the this, the that, the other. You're trying to get an uplift in valuation. You have to invest a significant amount of dollars often over and above the purchase cost of something like this as well. So let's have a look at time frame and this type of buy, add value, hold or sell, okay, idea. Now the time frame, if you're buying and holding, well, that buy and hold, sometimes it's a great way of dropping that back down into your long-term property portfolio. But I've seen people try to do often the buy, add value and sell. Now I'm not a big fan of that until you have a significant amount of experience, let's say 5-10 years under your belt, and also some cash and equity to make sure that that doesn't cause a problem for you. Right, the time frame, let's do the buy and sell sort of stuff. Often people are trying to do that in 6 to 18 months, okay? What is the dollars required, let's say, to do something significant? Let's say to put a granny flat on the back of a property, or do a subdivision on the back of a property, or a significant renovation. How much money will that require? Not only will you need 80 to 100K to purchase the property, but tell me in the chat, you know, a granny flat, a subdivision, or a significant renovation with your bits and pieces. Yeah, Sharon's saying 200K, right? So we need more money than down here. So, and also the risk, folks, the risk becomes increased, medium, okay? There's certainly and absolutely risk in this behavior, these sorts of things as we go along, okay? There's risk in being active as an investor. And I think the internet dropped out again. I've forgotten to turn off my VPN, which keeps turning it on and off. But anyway, we will continue. All right, and it's going to take us more time. If we were to purchase just a simple property, if we go back here, this would take us anywhere between 1 and 3 months. Done and dusted, we own it, we're off to the races, right? So, investor developer is the next profile. Last profile is the profile of what? This is somebody who buys, develops it, and sells, all right? That's a pure developer, okay? Now, nothing wrong with being a developer if that's what you want to do. Yeah, exactly, Alison. You'd have to, quit your job to manage these projects, and you might not have as much margin in there as you think. I've done a fair bit of coaching and teaching in and around some of our investors graduating into this area, because it's quite a good area to graduate into. But once you've got, my rule is, once you have at least $500,000 worth of liquid, accessible equity, you can graduate into this section if you want to do some more active investing, okay? Not before that, folks, not before that. I say 5 investment properties in your buy and hold strategy, 500 grand of equity, liquid, accessible, and then you can get into the active activities, okay? Don't rush it. Don't do it too early, because it can blow you up, okay? And the last but not least, the developer here as the, let's say, the more aggressive in this section, a developer, lot more time. They would take anywhere between sort of 24 and 48 months, even sort of 2 to 5 years to do a development, turn over their cash. This requires millions of dollars in cash, millions in cash, and the risk is very high. Okay, and what does the risk very high mean? Well, folks, the risk very high means if you mess it up, you can go bankrupt, you can lose it all, etc., etc. All right? So when you look at this, and I'll just overlay this just quickly, yes, you can get returns up there. Oh, it's not a very, you can get returns, you can get more dollars, but the risk is higher, okay? This takes more time, but the risk is low, okay? So where are you as an investor? Where are you going to play? For most of us, it's most appropriate, especially in the beginning, to play there as an investor, buy and hold. And if you want to, you can graduate into the investor developer space into the future. All right? All right, hopefully that made sense. We had a couple of little glitches on our internet. I'll remember tomorrow to make sure I turn off the bits and pieces. That's it from me today, folks, for the Wealth Coffee Chat. Thanks for joining me, as always. Great to have you guys on today. Hopefully that made sense today. Thought I would share a little bit of that pontification from myself. And join me tomorrow for another Wealth Coffee Chat around about the same time, 8:10 each weekday. That's it. I'm done. Cheers, folks. You guys are awesome. Thanks for joining, and see you tomorrow. Bye for now.